Hi everyone, welcome back to Eagle Eye Stocks, an option chain analysis series. In the previous video, we have covered the basics of what an option chain is and how it helps us to see the market positioning in the real time. If you have not watched, I have put the link in the description. So please click on the link and watch the previous video so that you can understand this video better. Have you ever noticed the market is going up, but your trades are still ends in loss? That's because price alone doesn't tell you the full story. In this video, we are taking the next step. I will show you how to read the open interest and price action together to find the real market direction. This video is much critical in understanding the option chain. Just looking at the charts or just looking at the open interest alone can be confusing. But when you combine both, it gives you clear picture, and that's where smart traders get their edge. Stay with me till the end, because once you understand this, you will never look at the market the same way again. Let's start simple. Open interest or OI means the total number of open positions in the market for both buy and sell that are still active. If open interest is increasing, that means new positions are being created. Traders are entering the market in this. If open interest is decreasing, it means traders are closing their position. They are exiting the market at this time. So rising open interest means fresh money is coming into the market. Falling open interest means positions are being closed. That's all you need to remember for now at this time. I will explain you as we go forward. Now let's see how the price and open interest move together and what that tells us. OI simply tells you how many open contracts are exit or currently active at the strike price. It's like the crowd size at each level of the market. But here is the magic. When you combine both OI with price movements, you can decode what smart money is doing. To understand this better, there are 4 key combinations to remember. First, when the price is increasing and open interest is also increasing, that's a fresh buying. This means traders who are entering the new positions, and it's a bullish sign. Second, when the price is decreasing and open interest is increasing, that means fresh selling. This means traders are opening new short positions here, and it's a bearish sign. Third, when the price is increasing and open interest is decreasing, that means short covering. Traders who sold earlier now buying back to exit. This is a bullish sign, but this usually for the short term. Fourth, when the price is decreasing and open interest is also decreasing, that means long unwinding. Traders who bought earlier are now closing their positions. This is a bearish signal, but this is also for the short term. So, when you track both prices and open interest together, you can clearly see whether the market move has strength or not. Now let's connect open interest with strike prices. When you look at the option chain, if you see high put open interest at certain strikes, that level often acts as support, because put writers believe the price will stay above that level. On the other hand, high call open interest indicates resistance. Call writers expect the market to stay below that strike. Let's take a simple example. Suppose Nifty is trading near 22,000. You notice that the price has been rising for 2 days, and at the same time, open interest is also increasing. That means traders are building fresh long positions. So the move has strength, and it's a bullish trend. On the other hand, if the price keeps going up and suddenly open interest starts falling, that means some traders are closing their long position. So the strength is reducing. You can expect small pullback or sideways move for some time. Let's take the opposite side of this. If the price is falling and the open interest is increasing, that means short positions are being added. A strong bearish trend is creating here. But if the price is falling and open interest is decreasing, that means shorts are covering. So the fall might be slowing down. This is how the smart traders confirm whether a move is strong or weak by looking at both price and the open interest together. So as long as the price stays between these two zones, the market is in balance. But when the price breaks above or below these high open interest levels, it can signal a shift in the market sentiment. Here is one extra tip. When you combine price and open interest with support and resistance zones, your accuracy improves even more. Next, let's talk about implied volatility as well, which we call as IV. IV represents the expected movement in the market, not direction, it's just volatility in the market. When IV rises, traders expect big move. It usually means fear is increasing in the market. When IV falls, it means confidence and stability in the market. The market expects the smaller moves. That's why before buying or selling options, smart traders always check IV. Because even if your view is right, buying when IV is high can still result in losses when IV cools down. This is called IV crash. When volatility drops, the premium value of the option prices will also drops. Now, here is where a real insight comes in. You can read market sentiments with precision if you combine open interest, price and IV. Here is how you can see these scenarios. First, when the price increases and open interest increases, IV is stable or slightly up. That's a strong uptrend. That means new longs are being created. Second, when price is decreasing and open interest is increasing and IV rising, that means fresh shorts are entering. That means bearish sentiments are building up. Third, if price is increasing and open interest is also decreasing, at the same time IV is also falling, that means short covering rally. An up move, that may be a temporary one. The fourth one, price is decreasing and open interest is decreasing, and at the same time IV is also falling. That means long unwinding, which means market showing some weakness. So what we learned in this video today? Open interest shows where positions are being built or closed, and price confirms who is winning. Is it buyer or seller? IV shows the emotions, fear or confidence. If you combine these three, you will understand the market like a pro. In the next episode, we'll dive into the put-call ratio, a powerful sentiment indicator that confirms what we have learned today. If you enjoyed watching this video, please like and subscribe to Eagle Eye Stocks